Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the Forex market. So recently, yesterday we have considered to set up on the Great British Pound, but today, guys, actually markets are so slow and just waiting for CPI numbers that on the technical side we have not too many things to discuss today. So mostly we have talked about this previously in the weekly report, and as it was on Friday, so we could make some conclusions and suggestions about the statistics when we had talked about non-farm payrolls release. Although we expected worse than expected numbers, they have become better than expected. So that's why I do not see really big sense we're anticipating of the CPI numbers report. Market expects actually minor decrease of the inflation from 9.1 last month to the 8.7 this month. Correspondingly, depending on what we will see, we could get different reactions. So if inflation will be higher, it means that market will expect more from more activity, more hawkish steps from the Fed, especially on the background of the good employment that we've got, and that should support the United States dollar, and euro probably will start dropping. There's a downside breakout and all this stuff. If inflation will be less than expected, so even below 8.7, that could lead market to the wrong conclusion that probably inflation is spiking and it's coming some sale, and that should not demand a lot from the Fed to raise rates aggressively, and they could focus on the stabilization of the economy performance. So in this case, probably euro could get some support and it could show some upward bounce. So that's why if today you intend to trade it, you should understand the risk of uncertainty, big volatility, and well, you could try to find some way how you could do this. As a rule, on the moment of the important data release, stop entry orders works not actually bad when you place the stop on the breakout on some level, and you take the position using the stop entry order when the market breaks through this level. We very often use it, and you probably know that sometimes very common to use particular this way of action. And today, currently market stands in a tight consolidation on the 4-hour time frame chart. This is triangle, some kind of the triangle, and we have the bearish dynamic pressure. But in the current circumstances, guys, although here with this divergence we could suggest that it's bearish sign, currently I would suggest that it's more bullish sign rather than bearish. It's just because it starts getting features of the bullish dynamic pressure, because MACD is dropping while the price action is not, and actually euro is forming here high lows, which is suggest possible upward breakout. Since we have the triangle, the triangle always keeps well at both direction, because currently you could suggest as butterfly to the upside, as butterfly to the downside, or something of that sort. So this always some two-sided pattern that actually as bulls as bears could find there and get some confirmation of their own view when you have the triangle. But the truth stands so that with the trying to possession here on the CPI report, you probably have to place some stop above the confidence, stop buy slightly near the COP target. So around 102.85, 102.80 maybe. It's right there. Stop buy order. So if market will start breaking up, you will buy here on the moment of the breakout. And I'm not sure that, I don't know just how weak CPI numbers might be or how strong. But to the downside, it seems that stop sell orders should be somewhere outside of this triangle as well, somewhere near these lows. You could even use them both because they can't execute together simultaneously. So once you have one entry, you could cancel the other. So that is the pressure of the using of the stop orders. So that's what actually we have on the technical side. At the end of the report, I would like to attract your attention to one thing that somehow has passed unsigned recently or slightly signed. I am talking about such indicators as the productivity and labor cost that we saw yesterday. Usually investors do not pay much attention to these indicators, but this is currently we have a really unique situation because productivity has dropped for 5%. This never happens in the history of the United States. So dramatic, or it might be it was somewhere after the Second World War, or it's really tough periods of history. But this just dramatic drop. Why this is important? Because productivity is the issue, the feature that lets you to pay more if it will rising. It lets you to pay more and increase the wealth of the population without rising the inflation. The high productivity is the more you could add to the wages of the workers, employees, without making impact on inflation. That's the feature of the productivity. When the productivity drops and it becomes the negative, it means that even paying the same number of the wage is already inflationary compared to the production value. This is first moment. Second, the labor cost that yesterday also has been released, and it shows inflation of the 10.6 on quarter-over-quarter basis. So this is really high inflation. This is inflationary indicator. It is a bit leading indicator compared to the CPI, and it already shows 10.6. As you understand, such combination as a drop of the productivity and rising of the labor cost, it's in fact this is double inflationary. So multi-inflationary combination, and this is of course shows the real problems United States economy. So that's important, and this definitely makes impact in the future on the performance of the United States economy and performance of the euro currency, euro USD currency pair. So that's what I would like to say. Now just let's see what will happen, because here if we do not have some clear evidence and can't be sure in any direction. I just told you about the bullish dynamic pressure that might be the pattern that could shed some light on possible performance. On the hourly chart, there's actually nothing to discuss. So market shows gradual slow action. Yes, here we have some ABCD completion, guardians cheaper to sell, but all this stuff is just very small and doesn't help you to understand in what direction breakout should follow. So that's why my opinion is that if you would like to try to trade the CPI report, you probably could think about using the stop entry orders. In the current circumstances, it might be most efficient tool to use when it's really big uncertainty.